Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having a fantastic day. We're taking a quick look here at Solana once more, seeing what's going on. Before we get started, just ask a quick favor if you could just hit this like button down below. Obviously follow and enable notifications if you're considering, paying closer attention to these things. Because what we like to look at here with Solana is a few key factors. First of all, this downtrend that we're seeing, we're going to talk about this descending trend. We're still well below the trend lines. But also furthermore too, some important liquidation levels we got to look at. So welcome aboard. Obviously, if you're new to the channel, thanks so much for watching. I do have a Trading Academy community and signals group, just so you're aware. Link down below for that if you're curious. We got a phenomenal Discord community here, but more important, took some nice healthy profits. We are pretty short heavy right now, folks. XRP 45% in 12 hours, Fetch.ai 52% in 7 days, ICP 13 hours 28%. And what was it? We also had a few AVAX trades too. These are actually longs from before, so keep in mind taking some profits in both directions, but all of our longs have been closed if I'm not mistaken at this point. Okay, we might have some 5% position size open on one trade or something, but generally speaking, we've closed all of those out in profit. More so short bias. So why are we not taking the shorts with Solana? Well, mainly because if you've watched my videos for a while, you'll know that I don't like shorting Solana regardless of how obvious it can look when it decides it wants to pull back. It's just such a strong recover. It recovers quite quickly and really strong. So it's really one of those things you got to recognize that it can be very tumultuous, and it's sometimes not really the greatest idea to take a long or a short without confirmation. Having said that, let's take a quick look here. We'll zoom in a little bit. See some late shorts here at about 177, early-ish shorts at 187. So those are two levels that could get swept here soon. There are larger concentrations above the price action than below, but as we can see, these lower levels keep getting hit. So people are getting a little more timid on taking long positions. There's some older longs at about 158. That could be the next sweep, but let's take a quick look at the last 12 hours. I'm very curious what the bias is here so far in the short term. Well, the bias was long positions at 169, but those all got destroyed with that lower wick down that we saw from Bitcoin recently. So keep in mind, folks, here in less than an hour, Fed meeting is going to commence, all right? And as soon as Jerome Powell gets up on the stage, things go bonkers. So please, recommend low leverage, low position size going into that, or no trades at all. Probably be the best call. That's what we're doing. We're waiting for our time to strike, essentially. And I know you can miss out on tons of opportunity because it goes in either direction quickly, but it's pretty much a drop of a dime. Like he'll say something bullish, and then all of a sudden, he'll say something inverse and just shoots up and down. It makes no sense to trade that. You're literally just gambling with your money. And that's not what we do as a community. That's not what I recommend you do either. No matter how you look at it here, we got some shorts. Again, we can see that on the larger time frames. On the 7-day, 177 seems to be the common denominator here for the level in which people feel comfortable taking a short here. So I would kind of side with that too, because we can see this level here, pretty obvious. Take a look at this here. Pretty straight line, 1, 2, 3, 4, 5, 6, 7 attempts to break that level. We got the SMAs hanging out just above here with the 200. Let's go ahead and double check a few things on the daily and work our way down first before we speculate too much. Because again, if you're new to trading or just in general, you are trying to familiarize yourself how to become a better trader, whether you're day trading or swing trading, you have to look at the bigger picture to understand generally what the overall trend is. Okay, the trend is your friend. If you're moving in the right direction with the trend, you're gonna have overall statistical probability of having more success. And that's really what it boils down to. There is a reason why we take pretty significant profits and with high accuracy. Granted, I rarely take 100% accuracy per month, but we did last month. As a matter of fact, February was good to us. This month we've hit one stop loss and we closed another trade early because ICP was looking pretty shaky to the upside here recently. So minus that, folks. Again, I'm showing you that because this is what your results can look like if you trade with confirmation. Okay. Now we've talked about this yesterday. The price action more likely to pull back. I think that's very true. However, from a macro perspective, we understand that we're still over this 50-day, 20-day, every SMA for that matter, on the daily, and there's some bearish signs on the indicators, however. Okay, so in other words, the overall trend is up. We need to recognize that. We have lost this midterm trend here with this little more recent ascending trend line, letting us know that we're trending down now, right? But truth is, we're over the 20-day SMA, and oftentimes staying over that 20-day SMA lets us know that we're still bullish. So what this just implies is that we could see a bounce here soon. This may even be the bottom. 150 might be the bottom. There's a lot of reasons why this area should provide some support, mainly because of that moving average. But again, you do not buy or take longs or shorts based on that one little indicator. Okay? It's just kind of giving us the mindset here, letting us know we're still okay. However, there is some conflicting information. This is why trading with confirmation is important. Stochastic swinging down very hard. That's pretty common when the price pulls back. So I'm not super bought into that, but the truth is money flow index is tapering off and we're under 70 in the RSI. This is generally a sell signal. It's a terrible X. Right there when you cross over 70 on any time frame, really, depending on the length of time you're holding it. So me personally, hindsight, if I wasn't along for Solana, I would have taken profits right there when the RSI crosses over 70, letting me know that the momentum has significantly shifted. Okay? That's generally where we're at there for this. So it's true. That's the case. The same thing happened with Bitcoin too. We lost 70 in the RSI and it's been pulling back for a few days now. So there's reasons why we are not taking longs and we're taking more short positions, just because that sentiment, that the overall sentiment when the market has shifted, most coins are either under the 20-day SMA or they lost 70 on the RSI. Okay, so we can kind of say that generally speaking, minus the moving average here, that we are generally bearish on the daily. Okay, that's easy to kind of summarize. Taking a look at the 4-hour time frame, we can see a similar scenario here, being under 50 on the RSI, money flow index very low. Keep in mind, you can see a common pivot around 20/30 for the money flow index, because the fact that the mindset is that everybody's selling, why isn't anybody buying, right? So you're going to start seeing people buy in. They're probably not the market movers or people like you and I, where you feel like it's a good value because it's overextended to the downside. That's just kind of more of a psychological thing for most people when they see the price as low as it has been in a long time. The fear of missing out kicks in and people buy those dips. That's what we're seeing there probably, but the truth is we're tapering off with volume, so we're underneath these moving averages. That's generally bearish. MACD is still diverging even though it's losing momentum, so we could either be at a bottom or this is just a straight sideways before the next leg down. Okay? Truth is though, we're under the 50 and the 20-day SMA. Those are never great signs. Until we're back up over those, we cannot consider this to be a bullish trend or the start of one. Okay, so the hourly is going to be a good little confirming factor for us here. There's a few things I want to kind of point out, in the sense that this descending trend is running concurrent with the Ichimoku cloud. Okay? And that's a really common occurrence in most trends. That's why it's such a powerful indicator. So if you're not familiar with how to use it, I have an instructional video, search for it, whatever you want. But I can tell you that if you can add this to your repertoire, or your tool belt, whatever you want to say, it's going to dramatically improve your odds of success. And the reason why is because it's like got a lot of different little indicators within it. So let's just talk about that really quick so you understand where we're coming from. When the lagging span here, this is the green guy, that one is when it's free and clear of the price action, it's not within the price. It lets you know that your position that you have open is good. In other words, if you have a short position open, you may want to consider leaving it open for another 12 hours or 6 hours roughly. Okay. Once it intersects, that's generally a rule of thumb to consider trimming or taking some profit. You don't have to close your whole position, just close part of it. At that point, though, make sure that whatever part you close is more than 50%. Adjust your stop loss to break even. Price comes back, then you're going to be able to close that position without any loss. You always walk away in the green. And I know that's an aha moment for a lot of people when they realize that, but that is something I trade teach in my trading academy and community, and of course I apply that in my signals too. It's really simple. It's an easy way to secure profits. What I'm getting at here, though, is the conversion line is still below the baseline, and we're below the cloud. Those are 3 out of 3 reasons to keep your short position open. Now, you got to recognize, too, that window of opportunity could be shifting soon if we break this range. So, for right now, we are tentatively range-bound between 166 and 176. Okay? As soon as we break that range, there's a stronger probability of the price action reversing itself. However, other contributing factors must be present. So let's just say the price action breaks above here, and you get this consolidation at previous resistance. If the price closes at 176 or higher today, that would be positive, but that by no means tells us that we have broken this descending trend, nor does it confirm that we have broken bullish. Okay? It just implies the price action has more propensity to increase than decrease. So, however you want to, work that into your trading is up to you. Because again, if you're a day trader, that would be a consideration to hold your position open for a few hours. If you're swing trading, that's not the confirmation we look for. We want confirmation about the cloud. We want to have a solid closure at 185 or higher, preferably over this 0.5 Fibonacci retracement level, and effectively make sure that we're up over this volume profile. Because I haven't talked about it, folks. There's a lot of volume at 185. That's going to work as a resistance. In fact, let's just go ahead and zoom out a little bit to see roughly where the amount is. And what do you know? Right there at 180, 185. Okay. So we have a ton of resistance above us. That's referred to commonly as a point of control, average true range. There's different ways to calculate it. But that 180 is going to be a strong resistance for us. So by no means does this mean as soon as we break range-bound activity here and we start establishing higher lows that we're in the clear. we're in the clear when we get over here, and that's going to take a couple of days, and that's going to exclude all the shenanigans we're going to see here in about an hour. So by the time you watch this video, the market could very well be in a complete shambles because of the fact that Jerome Powell got up and said some words that people didn't like. So folks, all the more reason just to kind of step aside, wait this one out. I mean, there's no need to fight if you don't have to. And to me personally, I like to go with the trend. I like to take trades that are having higher success rate. Can it be frustrating when you have markets like this that are consistently shifting and not quite giving bullish or bearish signs? Totally. But that's just how it works, and that's just kind of part of the game, okay? So, just recognize I analyze 30, 40, maybe 50 charts in a day. Not quite as deep as this, but in general, looking for opportunities, and I might find one or two that are primed and ready to go, okay? So again, trading with confirmation takes time and takes patience. But if you want to increase your success rate, you take less trades and better trades effectively, okay? That's what this is all about. So I hope you learned something here today. Obviously, please comment below. Again, like the video if you haven't already. Join us over with Bitunix, Phenomenal Exchange, link down below. If you want to register with them, they give us some really awesome rewards. We have a trading competition coming up at the end of the month. If you register, that's all down below too. But just know, no KYC or VPN with these guys, and they're adding like 10 to 20 trading pairs daily. Fantastic stuff. Thank you, Bitunix, and thank you too for your support. We'll look forward to seeing you on the next one. Have a great rest of your day.